Did you know that experts believe that Tesla stock will go 100% because of its insane plan? A lot of investors remain bullish on Tesla stock regardless of numerous issues. They are confident that Tesla will be able to overcome any roadblock and will continue to perform satisfactorily. You probably would not want to miss this info. Cathie Wood's bullishness on Tesla is nothing new. Wood, who manages ARK Invest funds, such as the ARK Innovation ETF, has Tesla among her top holdings. In fact, Cathie Wood-led ARK Invest has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization, which is not much of a surprise. Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy. Cathie Wood is the founder, CEO, and chief investment officer of ARK Investment Management, LLC. Wood has made a name for herself as a stock picker and leader when it comes to investing in disruptive technologies. Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Wood is also known for sometimes making big claims about the future. She's an advocate for Bitcoin, and she insists that electric vehicle maker Tesla is still an undervalued company and predicts it will be worth $3 trillion at some point. Although others scoffed at her when she first made that prediction, with Tesla's market cap at $923.77 billion as of May 4, 2022, that prediction might not seem so wild. These predictions are one of the reasons investors follow Cathie Wood and invest in her funds. It was Wood's intervention by the way of an open letter to Elon Musk back in 2018 that prevented Musk from reacquiring Tesla's stock allocation and taking the company private again. The letter turned out to be a phenomenon of sorts. In it, Cathie Wood outlined a 5-year bull thesis for Tesla stock, pitching its price in 2023 as high as $4,000. Musk at the time was happy to pay just $420 for every share in his nascent stock repurchase scheme. If you look at the revenue growth the last 5 years, it's compounded at roughly 48% per year, and that was, as you recall, when Tesla was experiencing quite a bit of controversy. Our forecast for the next 10 years is in the 50 to 60% range, depends if you take our bull or bear case, and there are a few reasons, says Cathie Wood. According to Wood, there are 4 barriers to entry that seem to have gotten higher in Tesla's favor. The first is battery technology. Wood said that Tesla is the only car manufacturer, except for a few in China, that decided to ride down the cost curve of the consumer electronics industry. This is due to the change in batteries that are used in laptops and/or cell phones. Wood noted that when Tesla decided to do that, auto manufacturers and auto analysts laughed at the company since there were publicized battery blow-ups on airplanes, which resulted in a ban on that kind of battery. Because of that, though, its cost is lower. Today, the cost of its battery pack system is significantly lower than that of other auto manufacturers. Wood said that if they want to compete with Tesla, those other automakers are going to lose money in electric vehicles, while their gas-powered vehicles will fall. The alternative will be less power or less range, so that we're seeing a lot of permutations around that, so batteries still 3 to 4 years ahead in terms of cost declines of other auto manufacturers who decided to use lithium-ion pouch technology as opposed to the cylindrical batteries that Tesla uses, says Wood. The second barrier to entry, according to Wood, is Tesla's own chip, which is the most critical from a valuation and growth point of view. Tesla is the only auto manufacturer to have designed its chip. Wood said, "The others didn't follow. They didn't have their own chip. They didn't have the vision." Wood said that Tesla is taking a leaf from Apple's book. She said, "If you remember in the day, Apple was the upstart. Nokia, Motorola, and Ericsson were the winners in the cell phone space." She explained that Apple was the upstart, where its founder Steve Jobs thought that it was not going to be just a phone, but will become a computer in the pocket, so to speak. And he did just that. "I'll never forget the delight I felt when I was able to access the internet on my phone. I just thought this was revolutionary," says Wood. She believes that Tesla, like Apple, has started and is starting something revolutionary. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. The other barrier to entry is the artificial intelligence chip, which is all about autonomous, and Tesla is the only one doing this. Wood said that when their analyst James Wang, who worked at NVIDIA, an artificial intelligence company, for 8 years, looked at the specs of Tesla's chip, he was in awe. Wang said that Tesla is 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. This is important in going autonomous with electric, which is Tesla's goal. Going autonomous has everything to do with artificial intelligence projects, and the winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, only has 20 million. Finally, Tesla's advantage over other companies is that they are the only auto manufacturer still that delivers over-the-air software updates to modify performance. The next barrier to entry is that Tesla has billions upon billions of miles of real-world driving data accumulated. According to Tesla's then AI director Andrej Karpathy, they have more corner cases to train their systems on than any other company. Wood said that it is not going to be possible for other rival companies to catch up because Tesla already has more than 1 million robots, including her Model 3, roaming around collecting data and sending it back every day. Another barrier to entry, according to Kathy Wood, is over-the-air software updates, which come as a surprise for her. Wood shared that she got her Model 3 in 2018 and that she has never had to take it in for a problem. Tesla apparently has diagnosed any problems I've had and corrected them before I see them or experience them. The only problem I've had is a nail in a tire, and of course software could not correct that. But that was it, says Wood. Those are the barriers to entry that gave Tesla the lead. According to Wood, their base case is $3,000 in 5 years from around $800 today. Our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except perhaps BYD in China, no one else is doing this yet, and Tesla had to go through a huge learning curve to get there, says Wood. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on the cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. This is not like the manufacturing of traditional autos. It's a completely different game. We used to say we thought Tesla would take 25% of the electric vehicle market in 5 years. Now we're saying we believe Tesla will take 25% of the total vehicle market in 5 years, and we think electric will be nearly half of total vehicles sold," says star investor Kathy Wood. ARK Invest's open-source valuation model of Tesla's stock, which they believe is a more transparent way for investors to see the research that ARK Invest has done on one of its major holdings, includes updates related to autonomous ride-hail assumptions, capital efficiency estimates, and forecasts for the year 2026. Based on its model analysis, ARK has set a price target of $4,600 for Tesla by 2026. The firm's research also concluded that there is a 25% probability that Tesla shares will be worth $2,900 in 2026 in a bearish scenario and $5,800 in a bullish scenario. Tesla's capital expenditure per incremental unit of capacity has improved, falling from $84,000 to $7,700. Previously, ARK expected that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. But now, the firm expects that it will spend only $2,000 to $7,000 per incremental unit of capacity in 2026. Make sure to subscribe to this channel for more insane updates on Tesla stock.